Welcome. Thank you everyone for joining us. As the topic suggests, have the Bitcoin ETFs lived up to the hype? The way I think about it, I mean, if you're an Asian parent and you really hold your kids to really high standards, then maybe there's a question to be asked here. But in reality, I think the Bitcoin ETFs have really sort of smashed all expectations in a resounding way, I would say. So we'll get into that conversation in a bit. But before that, maybe it's just quickly about myself. I run the Gemini operations in Asia Pacific. I've been in Bitcoin for the last sort of 5 years, but moved professionally last year. My prior background is actually in consumer tech. So I used to be, I built the ride-hailing and deliveries companies, Uber and GrabFood, across Southeast Asia, and so I've been in sort of various leadership roles, building consumer tech brands in the Asia Pacific region. So today we have Giselle and Kevin joining us on the panel. Maybe Giselle, you want to start with introducing yourself?
Sure. Hi everyone, I'm Giselle from Fidelity International at Digital Assets team. So at Fidelity International, we cover two main areas in digital assets. First is digital assets as an asset class, where we look at solutions and how we can help our clients getting secure assets. And second is digital assets as an infrastructure, where we look at tokenization in both fund and security level. Before joining digital assets team, I was part of the fixed income team, covering Asian and China bond strategies. Very nice to be here.
Kevin?
Right, so I'm Kevin. Morning, everyone. I'm the CEO of Gates.hk. Under the Gates brand name, we operate a separate Hong Kong entity here in Hong Kong, running a virtual access trading platforms, very specifically aiming to obtain the SFC trading license in Hong Kong. Right, and before that, I've been at like a combined 17 years of TradFi and crypto experience. Yeah, well, I know I'm not young, but like 17 years is a long time, so hopefully I can shed some light on this subject.
Well, great to have you both here. We'll start with sort of an easy one. So, over the last, 2.5 months, we've seen, roughly about 500,000 Bitcoin that the 9 new ETFs have taken in. We're talking about roughly about $30 billion in value. I think that might have changed actually over last night, seeing some of the price action last night. So I guess, the first question maybe we'll start with you, Giselle. What's been sort of the reaction, and how do you see this reaction from the traditional finance industry as well as the crypto industry at large?
Yeah, I think the overall reaction has been very positive so far. If you look into the Bitcoin ETF space, we see over 12 billion of net inflows coming to the market just within 2 months. So it's probably one of the most successful ETFs launched in history in the US. But at the same time, you look at the European ETFs market, there's been some net outflows. Now, kind of that reflecting there's increased choice for investors when looking into this space. So from a distribution perspective, at Fidelity International, we also do see some pickup in terms of client inquiries when coming to Bitcoin products in both APAC and Europe. For Europe, some inquiries mostly coming from distributors, and for APAC, they're mostly coming from high net worth segments and institutions.
Yeah, well, I think we're seeing it kind of in a high side right now. So like before that, a lot of people in the TradFi and crypto actually standing on the sideline, because obviously everyone here in cryptos already can buy Bitcoins on spot, and a lot of people in TradFi just like they don't care about Bitcoin at all, right? So it's just like this overlap of people that actually care about Bitcoins and don't know how to buy it. They will find like this accessibility of ETF. Now we're just like having this guesstimate of how big that overlap's going to be, right? And then we're just like so ready to swing our opinions, depends on how the Bitcoin's price goes. I still remember like the second day of this ETF launch, like everyone's just like, oh yeah, this like there's no inflow, this is like just a hype, right? But now we're seeing with the price or with the number of like ETF panels Giselle's been on, I think we're quite successful.
Is that the metric we're going with? Number of panels that Giselle has been on? That's all right. I guess maybe another thing that's been on my mind, and I'm sure it's been on many other people's mind as well, is IBIT, for example, which is the BlackRock ETF. They saw sort of they're the fastest ETF to get to $1 billion in inflows, right? And I think most of the other ETFs, the ones who are coming second, third. I mean, they've been sort of getting massive inflows as well. Like, what does this do for sort of the perception of the asset class? Has this sort of changed the perception of the asset class? And I would love to hear your thoughts on how you see that. We can start with you, Kevin. Yeah, go ahead.
Start. So I think when we talk about spot Bitcoin ETF, I think this is a true 0 to 1 process. Like obviously we do have like ETP in Europe, and then we also have like futures underlying ETF before, but like we've been hyping this up, and this is like not just accessibility, not just access class, not just investment instruments, but also like people seeing this as a proper traditional finance adoptions of the blockchain technology, of the cryptocurrency, right? So I think this is big, but like this is, I think, still one of the many processes to get to the end goal.
Right.
Yeah, I echo with Kevin's point. So obviously there is increased regulatory clarity in Europe, in Hong Kong, now in the US in related to Bitcoin products. And that will further legitimize Bitcoin or crypto assets and a legitimate asset class for investors. And we could see rising institutional adoption here because now there's a trust in the industry for now. But I'll say I think it's just the beginning of the journey, given a lot of traditional investors, it's very new to them, it's still evolving. So a lot of like ongoing understanding is needed, and many of them are actually still at the exploratory stage, trying to understand what this could mean in their portfolios. So for Fidelity, we are very committed to help them along this journey to provide them necessary tools for the choice of need as well.
Right. The way I've heard it described is that the pipes are ready for the institutions to start deploying capital. So moving outside, sort of looking outside the US a little bit. Now, you know, some of the spot Bitcoin ETFs have actually existed in other jurisdictions for some time now. So Canada has had spot Bitcoin ETFs since 2021. In fact, Gemini is one of the custodians for one of the issuers of the spot Bitcoin ETF in Canada. Obviously, Giselle, you'll be very familiar with the FBTC product, which is the ETP product that Fidelity has in Europe. Can you talk a little bit about, you know, how do you think about risk management, custody for that product? And I guess the question that's probably on many people's mind here in Asia is, what does this mean for the approval of spot Bitcoin or potentially spot crypto ETFs in jurisdictions such as Singapore or Hong Kong? Yeah, maybe we'll start with you, Giselle, and we'll move to Kevin.
Sure. I think Fidelity in this context, a very unique proposition. For those who may not know about our history, Fidelity is actually an early adopter in digital assets and blockchain technology. We have Fidelity Investments in the US who start developing or develop research efforts about 10 years ago, where Fidelity Investments start mining Bitcoin in 2014. So throughout the way, we also identified this market gap where we have Fidelity Digital Assets who launched in 2018 to offer institutional-grade custodian and enterprise service on crypto assets. So building on this foundation, Fidelity International actually launched our own Bitcoin spot strategy in Europe just to provide access for investors as a highly secure way of doing things. So for this strategy in particular, we have Fidelity Digital Assets as our service provider as a custodian who to cover our Bitcoin assets in a cold storage 24/7 on-site in a highly secure networks. So I'll say overall, like our history, the service and solutions we offer kind of really build the trust amongst our clients. And in terms of what it could mean for after the launch in the Bitcoin ETF space, I think it's actually served as a pretty critical reference for regulators globally, including APEC, given the US model is provide a lot of useful information in terms of how the model work, how things can be brought from thinking about blueprint into the first real trade. So I think there are a lot of reference that Hong Kong could be learning from there, especially with a potential launch in the upcoming months for the spot ETFs in Hong Kong.
Great.
Yeah, well, I think, I was born here, raised here, right? So I got to be very biased towards Hong Kong. And that's definitely not because we want to get a license from the SFC as well. But I think Hong Kong have like all the tools ready, right? So the regulations there, we historically for decades we're like a really good capital market. So historically we have all these things that's ready not only for ETF, but also like for spot trading, for derivatives, for leverage and margins. So it's a matter of whether or not we have the full support from like the overarching support from the government. And to that answer, I would say yes. So basically I wouldn't comment on other jurisdictions, but like in Hong Kong, we see a more holistic, coherent support from the government, not only to the SFC, but also the HKMA and also now the customs as well. We thinking this is the place that we can, again, back to the point, validate, legitimize the whole sector.
No, it's super fascinating, and we're seeing some of that play out, and hopefully we'll see some of the other jurisdictions look at approving the spot Bitcoin ETF in other jurisdictions. We'll hopefully see that over the next few months. Kevin, a question for you, since we're kind of from the same industry. Look, most people in the audience here, they're crypto native. They're probably not the target audience for going to buy a Bitcoin ETF, right? But there's something to be said about the ease of going to your brokerage account on Interactive Brokers or whatever and just pushing a button and buying the ETF, right? There's a huge sort of inflows coming from it, as we've seen. Since we're from the same industry, what do you think this means for exchanges? Like, how do you see this playing out for exchanges?
Yeah, well, yeah, that's a very good question. A lot of people is like afraid or concerned that the exchange will be marginalized because like all the traditional players can now dip into Bitcoin, right? But also spot ETF for that by design and by nature, they have to hash the underlying as well, right? So they have to buy it somewhere in a native crypto exchange, right? I think the dynamic would change in a way that this flow, which is like we consider institutional flows, will be more going towards the regulated licensed exchange and platforms, which is going back to the points where like this is the trend overall for the industry anyway, right? And also currently we would say, well, the market's like composed of the retail install market maker, but like soon enough, like we're talking about a single underlying ETF, right? And then what's next? We've seen ETF before, right? So ETF can be like doing leverage ETF, inverse ETF, basket ETF. These are the flows that will all go back to all this native crypto exchange because of the hashing of the underlying. So I would say the dynamic would change, but there's also still a reason for the native crypto exchange to exist.
Of course. Giselle, any thoughts on this? All right. So maybe I'll give you sort of my perspective on this, Kevin, which is I feel that a lot of people will probably come into and sort of go down the rabbit hole similar to the journeys that we went through, right? So once investment advisors in their retirement accounts start recommending it, people will discover it. And then ultimately, some percentage of that flow would ultimately go down the rabbit hole, potentially look at self-custody, and come to exchanges. So I think it's not that all the flow will move to the ETFs and exchanges will be left high and dry. I think there will definitely be a segment of people who will discover Bitcoin. They will start going deeper into the technology and then uncover it.
Yeah, if I may further add to that, I think there is also some ancillary sides of opportunities from the Bitcoin ETF, for example. Because if you look into the US, it's actually coming to the cash creation model, where a lot of traditional participants can actually potentially play a role in it. And a lot of them are trying to understand how they can play a role in it, for example, being an authorized participants in this journey. Of course, that will also trigger another wave of, people need to start looking about how they can potentially build up the digital asset infrastructure to service their clients in the future.
Right. Shifting gears a little bit and sort of delving back into the 9 new ETFs that launched, one of the phenomena that we've seen is that, all of the ETFs have been aggressively sort of competing on price, right? So 4 out of the 9 ETFs are not charging any fees for, I think, maybe a year or more. We saw one of the issuers, Van Eck, They reduced their fees to zero, and then they saw $120 million in inflows the next day. Gemini actually happens to be their custodian as well, so we we saw some of that inflow coming in. So I think this is a really interesting phenomenon, and I think it's great for the consumer. But as a consumer, if you're looking at these 9 ETFs, how should we think about what are the other parameters that we should be evaluating them on, right? Maybe you can. We'll start with Giselle. Maybe you want to speak to that.
Yeah, sure. I think there are a few aspects that investors should consider. First and foremost, definitely about the product feature. We've covered a couple of factors. One is about the issuer expertise, like whether the issuers come with both crypto and asset management expertise. And second, which I think is also very important, is the custodian. Especially in digital asset-based custodian, arguably the most essential component to secure their clients' assets. So just to look at how the custodians is regulated, how they store the client assets, and whether there's insurance policy to be covered, for example, will be very essential, some of the factors that a client should look into as well. And in terms of final point about product features will be about the cost. So we see the cost of the Bitcoin ETP or ETFs product has varies a lot. You see some products can go below 30 bips, some can charge above 2%. So investors probably need to do their own research to look for more cost-efficient solutions from that aspect. And beyond product features, I'll say the trading locations is also important. We have multiple Bitcoin spot ETFs, ETPs domiciled in the US, in Europe. So how the tradings could benefit different investors is something they should consider. And I think the final point is, and another important one is the taxation consideration. It's a very, very complicated topic for a lot of investors, but it's a very important one to study and do their own analysis in order to make sure that the assets they deploy is the most capital efficient way.
Great. Yeah, Kevin?
Well, I will answer this question by telling a story. We have time for story, right? Yeah, well,
yeah,
30-second story. So yeah, hashtag true story. So back at the very beginning of COVID, well, I make this sure bet on oil. Oil was just so low, I was like, well, I have to buy oils, right? And the easiest way to buy it, yes, ETF, right? So I just take a pun and just buy some oils. And the hard lessons I learned is the underlines actually oil futures, and oil futures for the first time in my whole career in finance, actually knowing that it can go to negative. I think you guys remember that the oil futures are actually going to what, negative $38 per barrel? That's the whole thing is being write off on the ETF, right? So I think that story tells you two things, right? So one thing again is how the individuals ETFs being structured. We're talking about not today, but a distant futures, a possibility of this extreme case where they run out of Bitcoins to buy. What happened with the ETF? Are they going to hash the underlying with something else just to track the price? The other thing is, again, just echo Giselle, is the custody, right? So apparently, when you have so much production of oil, you run out of space to store it, so it becomes a negative value, is actually something true, right? In ETF, we've been so commoditized the whole thing. We buy, in Hong Kong, we buy tracker funds. It's securities at the back, right? No one cares because CCAS, it's centralized already. Gold, they put in the vault, it's going to be safe. But Bitcoin in particular and oil in my lessons is we have to care about the custody because that would be a legitimate risk.
Sure. I guess just to wrap up, we've spoken about sort of the parameters that customers can evaluate. We've spoken about what the reaction has been. I guess a good way to look at what should we expect in the future would be sort of make some predictions on what are you looking at, Kevin? Are you looking at other spot crypto-based ETFs such as ETH ETF? Are you looking at other extensions of this? Would love to hear your take on where we go from here.
Yeah, well, I did mention that the ETF go a long way. This is the very first step of 150 steps process, right? The inverse ETF, leverage ETF, baskets ETF, or the ETF arbitrage that's going to happen. But I kind of make the pledge that I'll never go back to traditional finance. So let's talk about crypto, right? So everyone's here in crypto, so we love the fact that we're bringing the old money, the old world money, to crypto world because of ETF, but I'm an idealist. I'm thinking, what about the other way around, right? We want to make the circle. We want to like integrate in the whole financial ecosystem. What happens if we have crypto native ETF that the underlying is the other way around? What if the underlying is like S&P 500? What if the underlying is US Treasury bonds? That's something that's good because like if today I have some USDT, I have to go off ramp and go to my broker and to buy those things. But if I have an ETF on the exchange, I can just go right away, right? So I think to think about this, and fundamentally, this is like things that we've been doing and we've been talking about anyway. So we just talked about real-world asset in the last panel. We talk about stable coins and like gold-backed coins. Fundamentally, the idea is still just ETF, right? So the underlying is just like having the same tracking price. So I think to answer the questions of this whole subject, like have we lived up the hype? I don't think the hype actually do the justice to the potential of what we can do in ETF. I think that's the answer.
Yeah, I think with the rising institutional adoption, investors naturally will start looking to more in-depth research and look for the research expertise from here. At the same time, we should see also more convergence between the traditional products and crypto products from both distributions and investment perspective. And finally, given our like single ETFs available, we could also see potentially more ETFs, crypto ETFs as part of the building block of a traditional multi-asset portfolio, which could provide more diversification benefits for traditional portfolios.
Great, great. So to summarize, I think we're in a very, very early stage. So I think, of course, there was a hype. Of course, we've seen sort of significant inflows. We've seen sort of people's predictions getting smashed and massive inflows coming into the 9 new ETFs. However, I think the conclusion from this panel is that we're very, very early stages. I think we'll continue to see adoption coming through sort of retirement accounts, allocations from pension funds, and so on. And those pipes are ready. It's just a question of sort of deployment of that capital. So yeah, hold on to your seats, ladies and gentlemen. All right, thank you very much for joining us. Thanks, Giselle. Thanks, Kevin. It's a super interesting conversation. And thank you to everyone here.
All right, thank you very much. If you guys can gather right here for a photo, a panel that looks that good, you want to capture it forever.